So in this video, we are going to be breaking down one of my most effective tools, the EMA cloud. But more importantly, what makes up the EMA cloud? It's the 9 EMA and the 20 EMA. And today in this lesson, I want to break down very extensively why I use it. This has literally been a tool from God. It gives me so much clarity. It helps me get in and out of the market. And more importantly, it helps me hold on to trades. I coach a lot of traders, and one of the main issues every trader dives into is not being able to hold on to their winners. So today in this lesson, I'm going to show you how I use the 9 and the 20 EMA, how it helps me hold on to trades, how it helps me identify phenomenal entries and exits, and more importantly, how we use it to identify the conditions of the market, right? So the chart in front of us, you're going to see this gray line right here, that's end of day. Price ripped into end of day and just sold off very strong. We're on the 5-minute time frame. This purple line right here, that's previous day low. So right now we are identifying sellers controlling end of day and pushing price down below previous day low. This is very bearish. Buyers cannot hold open print. So 3 of the 4 critical levels have just been defended by sellers. So now at this point, I'm ready to take the market short, targeting lower targets. So I'm going to whip out the 1 hour, and once again, this cloud is telling me and showing me that conditions are bearish. The cloud is red. Price just respected the 20 EMA, which is that yellow line. So now I'm looking to get into the market targeting 42188, and I'll show you guys where I got that. If I whip out the daily time frame, I'm pulling it from all these candles right here. So now I'm going to dive into the 2-minute time frame. Price is coming up. It's retesting previous day low. I have my options loaded up in here. I'm going to go with the 425 puts. Now I'm watching to see how price reacts to previous day low. I'm going to speed this up a little bit. And I'm looking for sellers to defend the critical level. I don't want to close above this level, right? And we just got the cross on the moving averages, which is why we're getting this down sell signal. This is our HPT indicator. It really helps us identify trend and who's in control of the market. So like you can see right here, we did not close above previous day low. That's very bearish. So now I'm looking for sellers to show some strength. I'm going to enter into this short. We're going to go with 5 contracts. I don't want to see buyers push price above the previous candle. I want to see sellers continue to hold this. This is where a lot of traders make mistakes. The bottom of this candle, I want to enter in this a little sooner than later, just because I need to keep my stop above that candle. So at this point, we're going to enter the market short. Our stop loss is going to be above this candle right here, this 954 candle. Once again, I'm entering this short because sellers defended end of day. They defended open print, right? Which is right here. You can see that green candle right there, ripped right into the open, or just about, and buyers could not defend it. So now we're below the 50 EMA. We come up, we retested previous day low. We cannot close above previous day low. That's extremely bearish. So now we're entering the market short. I want to see this green candle get completely ignored, which it just did, just about. So now we're short and we're targeting 42188, right? And the purpose of this video, once again, is to show you how I use these moving averages. So now I'm in the play, right? This is where traders start getting jittery, right? This is where they go, oh, we're up 8%, we're up $60, we're up $100. Should I just take it, right? This is where a lot of traders start to struggle because they don't want to give back any profits, right? So all my advice to every trader that goes through this is put in your reps, use on demand, log every single trade you take, and start to ask yourself, what's the probability of actually reaching your target, right? If sellers are actually defending the critical levels in a bearish scenario, how often is the market imbalance going to happen, right? I've done the math. I've literally logged every single trade for the last 4 years. This is what really helps me understand that if sellers control that critical level, the chances of us going to the next critical level, capturing the market imbalance, which is the space in between critical level to critical level, right? The probability of this happening is 78% of the time. I'm willing to trade that. I'm willing to put on risk for that. That is why it's so important for you to identify strict criteria, do the research, log it extensively, and figure out how often does it happen. This gives you way more conviction. All right, now notice here, sellers are holding the EMA cloud, right? This is why I love moving averages. Moving averages don't just define if price is going up or down, but they show you the strength of the trend. I want to see price continuously rip into this moving average and reject. I want to see price reject the 50 EMA, close below it. So now at this point, I would be bumping my stop down. Let's see if we could do this here. Let's put, yeah, there we go. So no. So now I'm gonna bump my stop down so that I can control the risk, right? We're using the EMA cloud, right? We have multiple green bars that have just been ignored, this guy, and now we're getting another one. So sellers are showing strength. Notice here how we're hugging the 9, right? This is why we're getting that glorious move to the downside right now. Sellers are continuously holding this 9D EMA. But the main way that I use these moving averages is to understand if the trend is healthy or unhealthy. Notice here, we're getting a little extended. A pullback is very highly probable. So I have to use that and be like, okay, what sort of trend do I like holding on to? Ooh, this is glorious. This right here would be, let's see here. We're getting ready to scale. And the reason why is because we're getting very extended from the moving averages, right? There's a very high probability that when you get extended, price is gonna pull back in, right? So we're gonna lock a little profit in there, and we're gonna watch as price continues to unravel here, targeting 42188. So we got extended. Now let's keep our eye on this green bar here that was ignored. Any pullback into this level, and I'm interested in adding into this trade. Using the moving averages to understand, hey, listen, we're selling off right now. Sellers are clearly in control of price and they have the ball. I want to continue to trade with sellers. I'm not looking for reversals, right? Give up on the reversals and start trading continuations, and you're gonna start to see massive changes. Look at this, 50% return on this trade already. Selling off beautifully. Pre-market low, defended. Extended from that 9. Let's get a retest. Once again, using the 9D EMA, look at the gap between price and the cloud, right? So right now there's a very high chance that price is gonna maybe come back into this cloud. And understanding probabilities is gonna give you a way better philosophy on the market. It helps you understand that you're not always gonna be right. It helps you understand that there is risk and you need to learn to manage it. It helps you understand that no matter what, this can go against us, and that's completely fine. It's up to us to make the best move on the chessboard at all times. That's why I absolutely love trade. I love to trade because trading's all about making the best move on the chessboard. We can't control price, the banks do. So it's up to us to identify what they're doing. This is why I trade off pint numbers. This is why I trade with moving averages. This is why I trade market structure. This is how I communicate to the market and understand what she's telling me or what she's trying to tell me. So now price is doing its thing. Let's step ahead because I want to show you guys what happens when price, okay, notice coming into the cloud, respecting it. We got a green bar right here that was ignored, and now we're getting some retest. So now if you're the type of trader that struggles with holding on to trades, this is what you do. You watch price battle the EMAs. If we continuously just watch price come down, come up, battle the EMA, we understand that pullbacks are going to happen. We don't need to be afraid of a pullback. A pullback is healthy. It's actually, it's part of the trend. Every single trend is a pullback. And as long as you're taking profits when you're supposed to and adding into trades when you're supposed to, pullbacks aren't even going to hurt you. Honestly, I use pullbacks to better understand the the normalcy of the trend. You want a normal trend, right? You don't want an unhealthy trend that's selling off very violently, because the law of polarity states what goes down goes up, right? So if you're getting an extremely strong sell-off, it's a very high chance that the price is going to snap back into that moving average. I want to trade trends like this. I want to trade nice, healthy trends. Sellers were holding that 9D EMA. They were holding open print. They were holding end of day. We were able to identify that and then put on a trade. Hold on, what's going on here? While that buffers, right? Okay, look at that. You see how price came right back up into this green bar here that was ignored. Notice here that green bar right here, that 1014 candle that was ignored, also lined up with that 20 EMA. Notice here, buyers could not get price above 424 at all. They tried once, twice, 3 times, 4 times, 5 times, and now sellers are coming in extremely strong. So at this point, if I could get another green bar that's ignored, I'm then going to add back into this trade, targeting 42188. Maybe, let's see here. There we go. What about the 1 minute? Yep, there it is. Another green bar right there. So now we're going to put on a couple more. Sell market. Boom. I clicked the wrong one. It's okay. Let's just do 5 buy market. Once again, playing the trend. Playing the green bar that was just ignored. Ignored again. All right, let's go back to that 2 minute. That's also like candlestick. Learning to understand candlesticks it just gives you such a massive edge. You get way better understanding of what you're looking at, right? I'm constantly looking for green bars to be ignored. I'm looking for red bars to be ignored. I'm looking for them to line up with my moving averages. Look at this. Entered in on this green bar that was ignored. Stop above it. Boom. Price comes down, breaks pre-market low. And we get another green bar that's been ignored. Once, twice, 3 times. We come up into that 20 EMA. Once again, this is a healthy trend. I'm shorting it down, targeting 42188. Let's see what that 5 minutes telling us here. 5 minutes, glorious. Look at this. Just holding that EMA cloud very strong. Let's go back to the 2 minute here. So now in this scenario, I just added into the trade. So now my stop is going to be, once again, above the green bar that was ignored. If that's too far away, it looks like it is relatively far away, I'm just going to continue to watch price, play the trend. See, so how it works is you usually want to keep your stop outside the EMA cloud. It could get a little tricky, right? Because the EMA cloud could be around, 50 cents, 70 cents, 80 cents. And this is why you have to be able to take profits in between. You have to allow the trade to breathe though, right? And you have to use your moving averages to really get an idea of what you're willing to risk and understand who's in control of price, how you can see that, and how you can act on that. Step forward here. Look at, okay, so price ended up coming back into the 20 EMA. Sellers defended it. And we're just pushing price down here, pushing price down. Notice we have not been able to get above that green bar that's been ignored. So now how I would treat this is until we go down to our target, which is the demand zone, I have to stay bearish here. I have to stay bearish. I have to stay bearish until buyers can invalidate the strength sellers are showing right now. And we know sellers are showing strength because they continuously are just disrespecting buyers. They're continuously holding the moving averages. They're continuously holding market structure. And we didn't know any of this right here. All what we knew when we entered into this trade was that sellers held end of day. They held previous day low, the pint numbers, the moving averages crossed, and we were able to get in the trade with low risk and open print. So in the beginning, when we first took this trade, we only knew that sellers were holding the critical levels and they were crossing over the moving averages. You guys know I'm constantly preaching moving averages, pit numbers. This is why. Because if you use this strategy, you use these tools to understand who's in control of the market, that's literally all, that's all I use. That's all I need, right? I don't need to get more complex. I just need to understand the chart pattern at the critical levels. And then price just continues to sell here. Let's go back to that 5 minute, see what she looks like. Yep, there we go. Getting a very nice sell off here. And the green bar ignored, it works the same on the 5 minute. It's just a little harder to identify risk because I like keeping my risk above the green bar I'm shorting. Here we go. Really nice trade. We're up almost 20% on our add-in. There we go. Bam. Green bar, ignored. Retest, green bar, ignored. So now I'm moving my stop to this green bar. Very nice push. Very nice push. Oh, got another green bar ignored on the 2 minute time frame. See? Hold on. Look at that. Beautiful trade right there. Beautiful. Right? And yeah, and once again, you know, I'm not expecting you to be able to hold a trade. You know, we captured multiple large trades on this, right? It takes a little bit of time. But the more understanding you have of what you're watching, the easier it's going to be. The more you use the EMA cloud, the moving averages, the pint numbers, the easier it's going to be for you to, oh, okay, this is a pullback. That's completely fine. Not worried about it, right? I'm going to keep my stop where it needs to be appropriate, right? It's going to be probably outside the cloud here, and we're going to play the trend down, right? I highly recommend trading SPY contracts on this. You want to be careful when you're trying to target large trending moves, trading something like SPX. But use your SPY contracts, use your EMA cloud, use your understanding of the critical levels to identify the setups. Okay, pullback. Oh no, it's a pullback. Don't worry about it. Watch to see how sellers defend it. We've obviously taken profits on our way down here, right? So we're not worried about it. We've locked in our profits. See, and that's another thing. As trader, you have to learn to become extremely mindful, and you have to accept all scenarios. You cannot bug out when you get a pullback. We've gotten multiple pullbacks today. It's completely fine. Until we break that high, this trend is still very bearish. Let's do a fast forward here. Look at sellers or buyers cannot break that high. All this is telling me is sellers needed a little bit more liquidity to get the move down to where it was supposed to go. This is also why I use the 5 minute time frame to watch my positions. I like to enter in on the 2 minute, but then I'll watch it on the 5. The 2 could be very emotional. There it goes. That's a great play right there. Let's see if on demand's kind of lacking here. I apologize. Okay, look. You literally can't make this up. Get another green bar here that was ignored on our way down. Bing. So the purpose of this video, guys, was to help you understand the tool, right? The tool is the 9 and the 20 EMA. The purpose is to not only identify the direction of trend, but the strength of the trend. To use the tool to not only enter trades, but to hold on to trades. To use the tool to alleviate anxiety, stress, because you're taking profits when you're supposed to. You're adding in the trades when you're supposed to. You're no longer predicting price action. You're now reacting to it. I hope you guys enjoyed this lesson. Make sure you hit a like, drop a comment if you want to dive in more to it. I love moving averages. I love pit numbers. I will talk about them to the day I die. I love all you guys. Stay blessed for the rest. I'll see you guys in the next lesson.